Hey everyone, welcome in to another daily editorial here on the KE Report, getting an update from Metalla, royalty and streaming. We're going to be quickly recapping the Q1 financial results and then focusing more on the questions you've sent to me, more so on growth. What assets are coming online in the near term? It seems like a lot of you are focused on what assets will be paying by, let's say, the end of next year, 2025, to add to the bottom line of the company. We're chatting with Brent Heath, President and CEO of Metalla. Metalla is traded on the TSX Venture Exchange under the symbol MTA, also on the NYSE under that same symbol MTA. Now, Brett, just a quick overview here in terms of the Q1 financial update and asset update that was released May 15th. You issued an asset update here of 20 assets, so a lot to go through in that news release. Overall, 5 assets paid money to the company in Q1. Your total revenue from royalty and stream interests came in at $1.3 million. Just a quick overview here, Brett, of the assets that paid the company money in Q1 of this year, please.
Thanks, Corey. So we had production from Wharf, Aranzazu, La Quitada, El Realito, and Shanta. So those are the 5 assets. Q1 was historically a bit of a lighter quarter, as just the way that most major mining companies run their mine plans. We also had Higginsville drop off in Q4, but we now have Aranzazu in there post the Nova transaction as part of the revenue. But the exciting part is the growth that's really in front of us.
Well, Brett, let's get into that growth. Probably front and center as far as a new mine going into production is IAMGOLD's Côté mine, also the Gosselin deposit right next to it. This is germane to you because as they move through the sequence, you're going to start seeing revenues come in, I think, as of next year. So walk us through Côté with IAMGOLD.
So Côté is going to be Canada's third largest mine, or is basically Canada's third largest mine that's producing today. They're ramping up their production. The mine plan that IAMGOLD has put out there is basically starting in the south and it's working its way up to the north. Our royalty covers about 6 to 10% of the reserves on the north side of the pit. So our expectation there is that we'll probably get some chunkier type short-term cash flow from that in the second half of 25. And that will be primarily because as they phase up to the north, a lot of those tons will be coming out of the north at that time before they kind of go to more of a steady state. Obviously, the really exciting part of that story is the Gosselin deposit, 7.4 million ounces. They're drilling in between the deposits, and we think that there's potentially a major underground feeder source of these 2 big breccias. So that's going to be exciting to see what those drill results are today. Obviously, upgrading the resource probably either at the end of this year or early next year, and then also potentially the announcement of the integration of Gosselin to the mine plan within probably the next 12 to potentially up to 18 months. So all exciting stuff on that, but we will start to see some cash flow out of the Gosselin part of it next year. As of today, we've got Tocantinzinho, which is a new mine that is being built by Gene Mining. It's basically complete. They just put out a press release about a week ago, 97% complete. And where our expectations are is that we'll likely get our first royalty check out of this asset in Q3 or for Q3. And this will be a significant asset for us. It'll be one of our more significant assets in our portfolio. It's a 0.75% GVR. According to G Mining's mine plan on TZ for 2025, I mean, they're expected to produce over 200,000 ounces in 2025. So big mine, low cost, great operator, will start coming on, long life. These were one of the big development ones. Like we have many other ones that will start coming online here in the near future, kind of every quarter or two. We will probably see more of these. So after Taka, we've got Amalgamated Kirkland. Our expectations of that is second half of this year production. So we're not exactly sure if that'll be Q3 or Q4, but we're expecting that to start, and we'll get our first payments on that in the second half of this year. Another big one that is in the near term is our royalty, our 4% royalty on the Endeavour mine in Australia. And this is a 4% royalty. This is an asset that they have guided. They're They're expecting to restart in the first half of 2025. And according to their mine plan, this will be another very material, if not one of the largest, close to it, on the production from that asset in 2025. And then we've got a handful of also silver assets that are past producing, fully permitted, developed infrastructures there type of assets that we picked up a couple of years ago that we're seeing make some pretty good headwinds right now. We're not a little bit too early to count those in yet, but we're seeing very promising things happen at La Guitarra, which is operated by Sierra Madre. We think there's really good potential that we see some movement on San Martin, maybe Del Toro, La Paria, even Joaquin. So there's a number of these different silver assets that all make a lot of money in the high 20s, low 30s. And with silver where it is, particularly if we see the equity capital markets for some of these juniors and the silver companies open up even slightly, they should be able to raise the capital needed. And these are assets that can be back in production in 6 to 12 months. So that was kind of our vision when we partnered with First Majestic on that, is we saw that ability in a better metals environment, and we're seeing that with very strong conviction today.
So, Brett, just in summary then, again, 5 assets paying now. You just went through a handful of assets that sound like they'll be coming this year and into next year. Can you estimate either revenue, total revenue, or some ballpark figure, or just, quite frankly, the number of assets that will be paying the company by the end of next year, 2025?
Yeah, so we haven't given out our guidance for 2025, and we'll be giving that out towards, well, it'll probably be kind of early 2025, late this year on our guidance for the following year. But when you just kind of walk through even just a few of those assets, I think we should see at least 8, if not potentially up to 10 different assets in production by the end of 2025.
Well, and Brett, another point that you make in your presentation, and maybe worth reiterating here, is that while investors are anxious to see more growth and they want to see those revenues coming in and new royalties starting to pay, maybe speak to how long life these are, and that from a royalty company standpoint, it's not a today thing, it's a gradual value accretion. So some of these have very long lives to the assets.
Yeah, that's a great point, and that kind of drills down to our strategy that we've executed on since the inception of this business, and that was always to really focus on the future and focus on the quality of the assets. And our view, when we looked at building this company from the very beginning, is the quality is what is the real driving factor of the performance of the stock over the long term. Now, you can always buy short-term producing assets and show a little bit of revenue, but those assets stop, or things happen, or they're higher cost, or one of many things can happen. But when you get a royalty on a very high quality, long life asset that's operated by a big company, that historically these assets continue to replace reserves. They continue to do that. And so you can deplete a portfolio across 10 years, and you look at it, if you've got this type of quality in your portfolio, and you'll look at it 10 years later and you'll say, wow, like our reserves have actually increased via net of depletion. So these were the types of assets that we handpicked one by one, put in the portfolio. We're very patient to wait for them to turn on. Now it's happening. So in the second half of this year, we're going to start to see a bump up in our revenues that will continue on for the next decade. And the companies have all that growth bought and paid for. We bought and paid for all of that gold in the ground or copper in the ground at much, much lower prices in a much different environment than it is today. And we think our shareholders are going to reap very significant benefits of it.
So, Brett, let's tie that into capital management then, because some of the questions I've gotten is, that's great that these are long life assets, but you do need to make money to keep the lights on and to make future deals. Currently, the company sits, at the end of Q1, just under $11 million in the bank. And you've made comments on this show before saying that the scale that the company has grown to, you're looking for bigger acquisitions right now. Not small ones don't really move the needle. Will you have enough money then, or be cash flowing enough that you are cash flow positive? And then will you step on the accelerator and utilize some of this cash to make bigger deals?
Yeah, so I mean, we were operating cash flow positive last year. The year prior, we were basically, slightly below break even. And other than some one-off M&A expenses, I think will be operating cash flow positive this year as well, netting out some of the one-off M&A costs. And then in 2025, you're going to see a very significant change with these assets getting a full annualized production rate going forward. So that's going to make a very significant difference in our profile. I think that will open up a lot of not only the access to capital, but our cost of capital will probably decrease. I mean, currently we still do have about 30 to 35 million US of available liquidity for new transactions. I mean, our focus on transactions, there's times to be very aggressive, which when you go back the last 8 years, you can see that we're, if not the most aggressive, one of the most aggressive acquirers of royalties. We did 32 public transactions. We've grown our portfolio from 0 to 102 royalties. So exceptionally aggressive. And I think we're going into a period of time where you want to be a bit more cautious. That being said, we are actively looking at, as you noted, more material type of transactions. And we can be cautious and patient. The thing right now is that at the valuation that we're trading at, I mean, it's very difficult to find anything that is more valuable than our own stock, is the truth. I mean, right now, like the valuation is so low that there's nothing in the market that would be more attractive than just buying our own paper back. And so we've been looking at different ways to bring some cash forward to potentially do that. Obviously, we've got a much different profile in 25, which is only 6 months away right now. So that's right around the corner in regards to the free cash that is expected in 25. And then also for those bigger transactions, we can be patient. We can utilize the skill sets and the process that allowed us to be so successful in all those different acquisitions on much bigger deals. Those bigger deals, there's different ways to finance them. You don't have to have necessarily all that capital on your balance sheet. So, and it's actually, I think, almost easier to do a $100 to $300 million deal than it is a $50 million deal today. So that's how we're thinking about things. We believe that the profile of these assets will support a market cap that is relatively in the, call it, smaller mid-tier part of the royalty sector. And it may take a little bit of time for the portfolio to prove and the market to kind of fully understand what we've built here. But we don't think it's going to be that far into the future. And as that happens, as more of these assets come in production, our access to capital is going to go up, our cost of capital is going to go down. We're going to be in a better position to grow this business and scale it into a large mid-tier. When you look back in history and you look at the majors today, you'll see that they went through their biggest growth spurts were these small little windows, 18, 24 months, sometimes even only 12 months, where they deployed a very significant amount of capital. And they were patient and they were aggressive and they prepared and waited for these windows to open. And when they did some phenomenal deals, and it really set the companies up to be on their next stage of growth. And I think that's where we sit right now. I think we're in this phase where we want to be very cautious, delever. We want to actively look for very high quality, large transactions and utilize our ability and our strengths and our competitive advantage to bring these things in and potentially bring in alternative financing or some other forms to figure out a great way to make sure it's accretive for shareholders.
Okay. Brett, thanks for addressing that. Everyone, thanks for sending me in your questions. I hope this does clarify a little bit of the long-term strategy, but also the short-term catalysts here. It seems like a lot of investors are focused on that right now. They want to see gains now, not necessarily in the long term, but you do have a lot of assets coming online here in the next year and a half, and it's something we'll keep up to speed with you on. So, Brett, thank you again for your time. I'll post a link to the Metalla website so everyone can read over the recent news, and I'll follow up with you on some more asset updates. So, Brett, again, thank you very much for the update today.